Hey traders, it is Wednesday, January 15th. That means that it's time for my weekly swing trading video. Got some great picks lined up for you, so let's start with the market. What's it doing? Right now we've got the market pushing higher. We want to make sure that this upward sloping trend line stays intact. So what you can do is click on that candle right there. Click on that one right there. That's the trend line that we want maintained. We want the SPY to stay above 325. If it does not, we may run into some difficulties. We're keeping our bullish put spreads very, very short term, ideally 1 or 2 weeks out. I've got a couple that are a little bit longer than that right now. But that's what you want to do, is take advantage of that accelerated time decay. Plus, we've got earnings season coming up at a forward PE of 18 for the S&P 500. I don't know if those earnings reactions are going to put some weight on the overall market. I suspect that they might. Is the market going to roll over and crash? I don't think that at all, because we've got too many positives. The U.S.-China Phase 1 trade deal was signed today. We've got USMCA before Congress this week. That could get signed. We've got Brexit moving forward. We have historically low interest rates. You know from my daily comments that that's keeping a safety net under the market. So we have lots of great underlying macro events that are keeping this rally intact, and there are no credit concerns. So it's smooth sailing ahead, but I would not go out willy-nilly selling bullish put spreads right now, because the market is overextended. One whiff of bad news and we could see the market come in. But we've already seen it react to the Middle East conflict. No problem. Wasn't even a blip on the radar. So I think that we need to be a little bit selective here. I've got some good picks. We're going to be really focusing more on post-earnings plays, and I've got one for you tonight. So here's the picks for this week. But before I do that, I want to go back and take a look at last week's picks. So you can see January 8, every week I review the prior picks. Those of you who are watching this video on YouTube, go back and check my swing trading videos. I've got a separate section for them. You can see week to week to week how we do, and man, we have been knocking the cover off the ball. I'm going to start off with the weakest one, CI. Last week we liked this breakout right here. This was the candle that we were leaning on, and the trade was to sell the 207.50, 205 bullish put spread for a 50-cent credit. Stock pulled back. Apart from the price action 2 days ago, it was okay, because you can see we bounced right back. So if you stopped out right away on that trade because we closed below that support level, I don't blame you. Let's call this a loser, but right now it is above the 207.50 level with a couple days left till expiration. So if you hung in there, you got a winner right now. Let's take a look at Costco. That was my strongest play last week. I mentioned it to you, and boom, right out of the gate, the next day it flew higher. It must have been all of you out there buying it. But in any case, that's been a really nice spread for us. LEN, I'd mentioned that I had a little bit of trouble after the lowered guidance. I put the spread on after the open. The stock was really moving higher, and it pulled back, but it found support at this level. I put that bullish put spread on with the notion of leaning on that 100-day moving average, and boy did I have to lean on it, because the stock pulled back when they lowered guidance about 2 hours into trading. Threw me a little bit of a curveball, stuck it out the next day. We rallied above that 100-day moving average, and then the next day we were off to the races. Ever since, look at those long green candles in the stock closing through the high. Very, very strong price action. Winner. Netflix. Another nice one. We're leaning on that 200-day moving average in here. You can see how the stock is continuing to float higher. That put spread is in great shape. Twitter, beautiful. Man, we have been selling it here. We've been selling it here. We've been selling it here. Beautiful. Love this little breakout. Love the gradual move higher. Love the fact that it's in the gap right here. Twitter has been good. Twitter continues to look good for selling out of the money bullish put spreads. By the way, when you have Option Stalker, all you have to do is hover over the last candle and you get this E right here, and you can see that earnings are on 2/6. This really helps us plan out the trades, and you'll see me use it tonight, because I need to know when those earnings announcements are. I want to make sure that I'm selling those bullish put spreads, and I want them to expire before that earnings announcement. So Twitter, good. Workday, beautiful. Whoa, big run up. We want this breakout right here to hold. We've had a week under our belt. Those premiums should be coming in. So that one right here, we want that support level to hold. We got 2 more days to get through. So watch it. Make sure this price point right in here holds. And that's where we were January 8th. That was the price action. That was the first data that traded. So keep an eye on workday. Want to make sure that that support level holds in here. Out of all of these, we've got all winners with possibly a loser if you closed out on CI. I typically like to see more than 1 day below that strike price before I close it down. As long as the market conditions remain strong, which they have been, I'll let the stock move around. Try not to get shaken out of it. If the market were pulling back and the stock pulled back, that'd be a different story. Then I got 2 strikes against me and I have to really think about staying in that position. So it's full steam ahead right now with the market. I want to give you one quick little observation, and that's that we've seen some tails above body right here. So we're hitting up some resistance. I'm going to go into a 5-minute chart and I want to show you the last 2 days of trading. Today we had a really nice put trade in the chat room. We come up, long tails above body, establish a high, new all-time high, big red candle after that. Whoa, that's okay. We rallied back up, tested it, long tail, long tail. Uh-oh, now we know resistance is starting to form here and we back right back off again. So now we're starting to see a lot of tails above body and we can't even get back up to challenge the high. That's when we knew there was going to be a pullback. We bought some puts in here, made some really nice money. But look what happened late in the day. Selling that we have not seen in a month. Okay, so this doesn't tell me that the market's going to roll over and it's time to buy puts. Do not buy puts. This market is so dang strong in the background. The macro backdrop is so bullish. Do not do that, okay? If we get a pullback, it'll be a buying opportunity. So keep your powder dry, wait for that market pullback, or wait for earnings announcements. We're going to be selling out of the money bullish put spreads on strong stocks that post fantastic earnings results, but that pull back on the number. So we've got this support level today that the market ran back to, and I'm going to show you the price action yesterday. So market tried to establish a new high. It did. There was some recycled news that hit, and that was enough to shake out some bullish speculators and to spark a little bit of selling. So we can expect 2-sided trading right now during the day. We can expect to see some signs of resistance. So that's great for us day traders. Love it. So let's get into some stock picks. I'm going to show you how I've been finding them. There's so many different ways to find them, but right now you should really focus on earnings announcements. Those are going to provide us with great opportunities. There's a price discovery process that the stock goes through. That's what we want to capitalize on. So I'm going to go into a couple of different searches here as usual. Going to go into the bullish side because we are still bullish on the market. Heavy buying was one source that I looked at. We really nailed some great short squeezes this week like Shack, BYND, TLRY. By the way, if you're watching this video, you're an Option Stalker subscriber, you have access to the chat room. Oh yeah, I know, Pete, but I'm not really a day trader, so I don't like to look at that. Almost every stock that we day trade in that room is great on a swing trading basis. So if you're looking for ideas, all you have to do is to scan through the transcripts. Probably take you 5 minutes. Look at what we're trading. Those are the stocks, and I have been including bullish put spreads in that daily commentary when I see them. And that's how it's going to be during earnings season also, because I want traders to be able to take advantage of those bullish put spreads immediately. And I've got a couple of spreads that I highlighted in today's commentary. So yes, from this list, I definitely found some stocks that I liked, and also Pop Bull, of course. Buy into earnings. This is a great search. And there were 2 that I highlighted this week that I think set up very, very nicely because I did a separate video on those and you already saw those. I'm not going to include those in tonight's video, but I see one right here, which is Juniper. That's a really nice one. It's getting through this 100-day and 200-day moving average. We're looking to sell those Juniper puts somewhere down in this level on the notion that the stock is going to rally into earnings. We know that statistically it tends to do so 75% of the time. The stock was also, go on to that daily chart. We want to lean on that 100-day moving average. We want to sell below it. And I think we were able to get even below that 100-day moving average around the $24 strike price. So even better. Another one that I highlighted earlier this week was, gosh, it escapes me. I know I saw it up in here. Whirlpool. Loved Whirlpool. Gosh, that was a nice one. So I posted this video a couple days ago. I hope some of you were able to get in that spread. We're looking to sell below this 100-day moving average. Looks excellent. So buy into earnings. These stocks rally 75% of the time, 2 weeks ahead of earnings, and they've done so over the last 12 quarters. Enormous statistical advantage. We do not want to be selling these when the stock is lifting off and it's gone parabolic, okay? We want stocks like this that have been laggards but that are starting to show some signs of life. And we want to lean on these major technical support levels. We're also going to be going into strong after earnings and week after earnings. This is going to be the most incredible resource for you over the course of the next 2 or 3 weeks. You can expect to see lots and lots of candidates coming from this list. You spend 2 minutes on this list every day and you're going to find some on your own. Promise. Just follow the types of patterns that I'm looking for. It'll be really easy for you. So let's get on with it. What do I like? What did I find? So one stock that I really like is CVS, and I highlighted this in the chat room. And this was a strong into earnings, hover over that, 212. So we want an option that expires before February 12th. We see this downward sloping trend line right here. We see that opening price right there. That's the support that we want held, which coincides with the $74 strike price. So I would suggest distancing yourself even more than that and trying to get down to this support level right in here, which puts us down around the $71 level. I'm going to put up the option chain here. So we've got January 24th, still gives us plenty of time on this one. And in fact, we've even got time to go out to February 7th. So let's distance ourselves even more and go out to February 7th expiration. And then now we're going to go down and see what we can get for that $70 kind of level in here. And so if we do that, we see that on the 72, pull this in just a little bit, 72, 71.50. By the way, if you haven't used the Option Stalker order entry, please give it a try. I spent a lot of money developing this over the last couple of months. It is so slick. I'll show you. You can just click that if you don't like it. Click it again. If you click the ask, you're buying. If you click the bid, you're selling. It knows if you're selling to open or buying to close. All of that is programmed in. But when I do that, you'll see that the credit, it splits the bid ask. So it's real easy to ratchet the price up and down. In this particular case, I would like to go for a 10-cent credit. I always like to try and get 10 cents when I do a 50-cent spread between these strike prices. So that generates a 25% return for me. I will go down to 20%. So if I were getting, instead of a dime, if I were getting 8 or 9 cents, I might be okay with that too under the right circumstances. So you can also stage these orders, play some GTC. Now if you wanted to, here's a suggestion for you. Let's say that you wanted to do this spread, but you wanted to see how the market opened the next day and you really didn't want to have it out there live, so to speak, but you also didn't want to have to go through the process of entering it and trying to remember which date you had. Here's what you can do. How much is this spread ever going to be worth? It's going to be worth 50 cents. Could you sell it for 50 cents? Probably not even a minute before expiration. If it were fully in the money, could you sell it for 50 cents? So if I come up here and I put in 50-cent credit and then I hit submit, there's no way that I'm going to be filled on that. So I can go in and easily adjust that price. Just click modify. Now the order is already loaded. I can see where that spread is trading the next morning. It's a staged order, and it makes it much easier for me if I don't have a lot of time the next day to do this. So if you're trading mobily, or you have a mobile interface, that's just a suggestion on how you can stage these orders and make it easier for yourself to enter them the next day. So I like CVS, really, really nice candidate here. Love that breakout above that downward sloping trend line. Love these long tails under body right here. Love this breakout here. Support 1, 2, 3, 4. Beautiful, right in there. So that's going to be a winner. I've got a really good feeling about that one. So let's go back into my list here, see what's next on it. And we're going to go into the January 15 bull list. Whoops. Now you know what my bearish pick is. Darn it. So we've got CVS, CL. Really like this one. Well, you can see a nice gradual uptrend here, not getting ahead of itself. We've got a resistance level here. Now the stock is through that resistance level. It's through the 100-day moving average and through the 200-day moving average. We can see that earnings are on 131, so we're going to probably have to go with a 124 bullish put spread. So let's bring up the options chain. January 24, and let's see how far out we can go. In this particular case, I'd like to be able to get down below that 100-day moving average. I'd like to get right in here. So the 69.50 strike would be the one that I want to short, and the 69.50, 69 bullish put spread. Click on the bid for the 69.50s. Click on the ask for the $69. You can see the spread is 7 cents bid, offered at 17. Should be able to get a dime for that pretty easily. So I'm going to ratchet that down. Actually, I'll leave it as such. Excuse me, on a 12-cent credit. Put that GTC. So that's another spread that I like. As long as it maintains this 69.50 level, this 100-day moving average, I like it. And these spreads expire very soon too. IBM, that's one that I posted in the chat room today. I'm not sure what's up with these option premiums, but they are really, really high. I double-checked the earnings announcement date today, and yes, it announces earnings on 1/28, January 28th, so we can do a January 24 option spread. Boy, if I could sell one down here, that would be great. Got 1, 2, 3 tests of support down around that 132 level. Yeah, excellent. You can see how it's been bumping up against this 100-day moving average. Okay, it wants to try and get through. It's backed off. Maybe it'll be able to get above it. I'd like it even better if it were able to. But for right now, I do have an upward sloping trend line that I can lean on. And I certainly have this major, major support level at the 132 level. So let's check it out and see what we can do here. I'm going to bring up the options. And we're going to go into the January 24 expiration. It's only a week and a half away, so we're not talking about a lot of time here. And on this one, if we can do the 131, the 131 would be below that support right in there. It'd be a new closing low. Boy, I love that. Look, the 131.97. So we've got $1 between the strike prices. I'd like to get ideally 20 cents for something like that. You can see it's 16 bid offered at 24. I could probably squeeze 20 cents out of this. This to me is a no-brainer. I don't know if there's some kind of major announcement going on with IBM or what the heck the case is, but the stock is choppy, but it's not that volatile. I love that spread. That one really makes sense to me. Let's say the market falls apart. I still think this stock is going to hold this major support level. It's been a laggard. So I absolutely love that one. I would do that for a 20-cent credit. Put that baby in GTC. That's a really good one. So, PINS, into the gap right here. We want that gap to hold right in here. And that gap, as far as I can see, is about halfway up this long green candle. So that's another support level. This $21 level coincides. Let's put the crosshair up. You can see We're through that horizontal resistance. We're halfway up that long green candle. That's a pretty decent place for us to enter a trade. We've got this nice rally right in here, long green bar, big volume. I would like to have seen the stock close higher today, meaning close above the open. It did close higher than yesterday's close, but I would like to see it be able to get in and fill this gap, and that's why I also like it, is I believe that it'll have a tendency to do that. You can see the earnings release date is on January 30th, so we're going to have to go into the January 24s. So we're going to click on those, see how far we can get from the action. In this case, I'm going to be looking to get down to that $21 strike price, see what we can get. Click that, click that. I like to get a dime for these. And, you know, the 2050s would actually put us even closer, like right down in here, and it would put us further into this horizontal support level. See, the 2050s would be down in the lower quarter of this green bar. Let's see what we can do there. So again, if I want to change my strike prices in Option Stalker, I just click down on that and move it there, and then I can click on that. So this is a nickel bid offered at 20 cents. Can I get a dime? Well, that's bid side. I might be able to get a dime for that. I would certainly like that for a dime. So PINS, if I can sell that bullish put spread, the 2050 20, January 24th, I like it. I think the stock still has more upside. I think it's going to want to try and fill that gap. So those are all bullish candidates, and I got one more to look at here. Teva. So we have Teva breaking out above this downward sloping trend line. We have it above the 200-day moving average. We have it closing on the high. We've got another green candle today. This is very strong price movement on big volume. This is not an expensive stock. So you want to make sure that this downward sloping trend line is preserved, and that takes us to the halfway point of this long green candle, which should be support, and it also takes us to the 200-day moving average. So I want to make sure that that's also supported. So this 950 level on the stock, that's my magic number. That also almost coincides with this horizontal support level right in here. I feel very comfortable with that 950 level. Hover over. February 12th is the earnings release date. So we know that we can go into Febs, click trade options, and we'll go into the February 7s. That still works for us, and we'll go down to that 950 strike price. Click on that, click on the ask. You can see that spread is 7 cents bid, offered at 11 cents. Now this is one, because we're doing a $9.50 stock here, actually a $10.50 stock, for it to make that kind of move, that is a huge percentage move. So we have a little bit more safety. I don't necessarily need to get a dime on this one. I would easily take 9 cents for it, put that GTC up there, submit it. And again, if I were looking to stage this order, I would put a 50-cent credit in. I'm never going to get a 50-cent credit. I would never be filled at that price, but then I'm not scrambling around the next day trying to remember, when does it announce earnings? Which expiration date did I need to use? Which strike prices was I interested in? You know, if it's a 50-cent credit spread, that you want to be getting a dime for it. You know, if it's a $1 credit spread, you want to be getting somewhere in the neighborhood of 20 cents, 15 to 20 cents. You know that if it's a 2.5 point spread, $2.50 between the strike prices, you know you're looking for about a 50-cent credit. That's how you do it. So if we were doing a $5 put credit spread, $5 between the strike prices, we'd be looking to get $1. Just look for that kind of 20% is where I like to be, 15 to 20%. So those are all the bullish picks. I've got one bearish pick. Maybe you already saw it. And there are going to be bearish picks. JPM. Huh. Why is he like JPM? What's so special about that? One thing that's special about it is it had earnings. And usually after earnings, there's a pretty good tell of what's going on with the stock. You can see how the stock ran up to this 141 level and it backed off. Today, sold off. It's going to test this breakout right in here. I feel that there's a very good chance it's going to test that breakout. Big volume in here, little relative weakness today. We've had a lot of banks report. Let's take a look at that XLF. That'll tell us what the entire sector is doing. Major compression, major resistance at the $31 level for the whole sector. I think this sets up for a really nice bearish call spread. Hey, we haven't done any of those for a while. So, where would I want to sell that? I would want to sell that bearish call spread above this closing high. You can see the close there is 140.19. If I could get up to 141, which also happened to be the high on this particular day, the all-time high, I'd feel pretty dang safe being able to sell a bearish call spread up here. Now, banks don't move much. You can see it's just compress. So I'm going to have to go out in time, but I've got lots of time. So because earnings were just announced. We just had earnings 2 days ago. So I can go out as far as I want, but I'm not going to go out that far because I want to take advantage of accelerated time decay. So I'm going to go out to January 31st, and I'm looking at this spread right here. So I would be selling the January 141 call and buying the January 142 call, and expecting the stock to stay below that all-time high. Now we could see right here, it's 12 cents bid, offered at 17 cents. This is $1 between the strike prices, so I'm okay bringing in 15 cents on this. And banks don't move much. They have very low implied volatility on most of these options, so I'm okay with that. I'm okay with 15 cents. If the stock has a little bit of a move higher tomorrow, great. Let it rally a little bit. The market's been moving higher almost every day. You get some opportunity and you see some buying coming in. So there's a good chance that this stock, even though it closed on its low, will probably rally a little bit at some point tomorrow. If you can squeeze 20 cents out of this spread, great. If you got to go with 15 cents, that's also okay. Try and get as much as you can for it, but I do like that spread as well. So those are your picks for this week. We've got, I think, 5 or 6 bullish spreads. And that reminds me, I got to do one thing. So how many do we have there? We got 5 bullish and 1 bearish. I'm always going to try and give you anywhere between 4 and 6 trades. I do want to end on one note. We've got earnings coming up. Pretty lofty PE ratio right now. There's a chance that stocks will start to settle back. Take it easy in here, okay? Let's see what happens. I wouldn't go gangbusters. I think that if you put on maybe 33%, like a third of your account right now in bullish put spreads, you'll be okay. But leave that 66% for these opportunities and for these pullbacks. I believe that this upward sloping trend line is going to stay intact. I believe that we're going to see a trading range probably between 320 and 330 for the first quarter of the year, and we'll be back and forth between it. So instead of moving higher, the market will start moving sideways. As these really good stocks pull in, we're going to have lots of opportunities. So keep your powder dry. I've given you some really nice picks. These are all expiring in a week and a half or so, all of them expiring before they announce earnings. So you're going to have that accelerated time decay working in your favor. I think these are going to work out beautifully for you. Thanks so much. Good luck trading. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.